Rohr here with an early concise highlight on Thursday, February 19th, 2015. It's currently 7 a.m. U.S. Central Time, and it's going to be very concise today because we're only going to cover the S&P 500 future. Almost everything else in our Global View video from Wednesday morning and the market observations write-up from after Wednesday's U.S. close remain the same. And besides, the U.S. equity psychology as represented by the S&P is the most critical factor out there right now. So what does all this mean to the markets? Well, it means right now the S&P 500 future is off $2.50 at 2093. And it's been down around 2090 earlier today on various influences. And what's interesting about 2093 is that's just about the level where the market put on the down break going back to early yesterday below its more aggressive upward channel. And therefore, taking that away late in the day and putting on a retest this morning is interesting. And ultimately, the more major upward channel that it respected throughout the day yesterday on, grinding higher, sitting against it, is up to about the 2096 area early today, meaning the market in about a little less than an hour and a half would have to open higher. And what's interesting is this channel by the late part of the day today is up to 2105 or so. So it's going to be very interesting to see whether the S&P can regain its footing either after some minor slippage out of this channel and what it does with the 2093 ostensibly negated down break from yesterday. And this is very important. As we pointed out in yesterday morning's video, it's very important because that channel, for all it's an extension all the way out here from topping trajectory that was set as the reference line all the way back after the February 2nd last test, multiple tests in January. This was the last test of the 1985 to 78 range with some modest slippage at the top of the month on February 2nd. This ultimately is the overall upward channel since that low on February 2nd. So how the market acts around this overall, even if it breaks out temporarily, if it then negates that breakout, it could still be strong. To the degree it's slipping below 2095 or so today on a sustained basis and possibly below yesterday's low around the old all-time high at 2088.70 is going to be a very important factor also. Whereas previous, the burden of proof was on the bears to get the hourly MACD back below the upper runaway band. That is now, in fact, below the upper runaway band. That leaves the burden of proof on the bulls to get this market pushing up again for another escape of the sort we saw going back to early February when the escape signaled the ability to put on some sustained upside activity, and that was revisited as the market escaped again back on the 11th. And that pretty much does it for the short-term view of the S&P 500.